I always think that it's interesting to think in layers in terms of housing markets, and not just, I think we have a national layer, and the national layer is affected basically by economic policy, and the top layers are of course monetary policy, which is interest rates. So all buyers and sellers, particularly buyers, are impacted by interest rates because house prices are a product generally of, in terms of affordability, of being able to pay more or with a lower interest rate, a given income, or maybe pay less because interest rates rise. So that has that. That's why the cycle typically, particularly our capital city cycles, have that follow the track of monetary policy: higher rates, lower prices; lower rates, higher prices. So that's the big picture. So, but that's the same energy that you see from a capital city point of view as you drill down into a regional level. So the top layer is monetary policy and of course fiscal policy, because that's the capacity of governments, particularly state and national governments, to influence an area by spending. All right. So, but that tends to have less of an impact in the direct influence of housing markets compared to monetary policy. But as you drill down through the layers, you tend to have less reflection of monetary policy as you go down through, the capital city, the sub-markets of a capital city, and then regional centres and smaller regional centres, and then of course, what we always look for in housing markets isn't so much what's happening in the suburb or neighbourhood, because those things can be very individual, because buyers and sellers can have an individual agenda or an individual capacity. The seller might, have to sell because it's a death or a divorce, or they're leaving town, or they might not have to sell. So they can be, well, we'll see how much I can get. A buyer might, be looking for this exact property, and therefore I'm just going to pay whatever I have to within reason to get the property. So those sort of things can mean that at the individual level, it's not really a cycle, although it sort of is. So at that very base level is the minimum influence on what we're looking for in terms of what markets are doing. And markets are about adding up all those buying and selling decisions and finding out what the underlying energy, the underlying noise is to our housing markets. And there is an underlying noise, it is something that notionally affects even the most granular decision, all right? So, but what we are interested in knowing is what's happening in housing markets. And the big difference is with regional compared to capital city markets is it's more of a local effect, because it's more localised, the smaller a number of sales, buyers and sellers that you have activated in that market. So, but the other point to that is that it's interesting that your regional centres tend to follow the capital city markets. So there is that picking up of the heat or the cold from the capital city markets, and that's because employment levels and people do shift from capital city to regional centres generally. States differ in terms of their regionality and their connection to regions, and also regions differ as well. So perhaps a flatter cycle is the outcome in terms of housing market activity, generally regions versus capital cities, but there is a similarity in how one's performing and how the other's performing, notwithstanding all, as said, states are different in terms of their regionality. And it can also mean the opposite, because if there's a significant driving force in a particular region, it can actually elevate in the shorter term that cycle compared to other factors. So I guess it's there can be a single factor that influences a regional market more than it would perhaps a state market. But it is those layers of impacts of supply and demand drivers that generally determines the relationship between regional centre and the big picture cycle and the cycle of the capital city that it's all part of in that state, if you understand.
Yeah.
And that, well, it does two ways. The first thing is that regional centres are affected economically. So when you have a strong growth market such as Sydney, it's generating for governments a lot of income through stamp duty, for example. And there's always a lot of downstream effects, because people are, whether it's chicken and an egg in terms of the economy, whether a strong housing market generates a strong economy or a strong economy generates a strong housing market, it does typically mean more people coming in. And of course people are the most significant driver of housing markets, because they demand accommodation. So the ripple effect is from that capital city market in terms of generating the capacity for a bigger spend from the state government into a regional centre, and of course those things differ according to a numerous variables. The political stance, but that can influence the impact of a strong capital city market on regional centres. Now, so that's that ripple effect. But it can also, that ripple can be a big ripple somewhere and a smaller ripple somewhere else. Now, New South Wales, which is very interesting, we're seeing a very strong ripple effect now moving up the coast. Northern New South Wales is the strongest regional market in Australia at the moment, and of course a lot of that are cashed up Sydney buyers who are taking advantage of the $1 million median, and their multi-million-dollar properties, retiring, downsizing, green changes, sea changes, and that's part of the wealth effect, where people look for areas which they perceive to be premium areas to retire to change their lifestyle to, and that's typically the beach in so many instances, particularly New South Wales. That's why we're seeing the coastal energy. Now, the regional energies that are rural, they are more about local drivers, and there's still a very strong green change preference for retirees and for those that are looking for a rural lifestyle or semi-rural lifestyle. So that's also part of it, but we tend to see, so that's a difference in the ripple effect according to the nature of the particular market. So coastal markets tend to drive more demand than those that are rural markets. Now, the point to that is it's not necessarily all coastal markets, because the south of Sydney tends to be a little less popular than north of Sydney, but it tends to obviously be more popular with people from Canberra, for instance, the south coast of New South Wales. So, but of course Canberra's a much smaller capital city market compared to Sydney. So yes, absolutely a ripple effect, but there is a lag, of course, and that's why it's called a ripple. It's not just happens straight away, and then it gets back to those lower layers of drivers that are in the local regional area, depending on the impact of that ripple effect. And sometimes it can be moderated by how strong the regional market is. So the ripple effect might just be hardly noticeable because of the strength of the market, and it might not have the same impact because of the weakness of that local market. So, but definitely there is an impact from what's happening in the capital city and what happens with all those other layers. But it does again depend on local factors of supply and demand and the nature of the local market. And the thing we should always remember is that intangible, and that's confidence. And confidence is the one immeasurable, I guess, human factor in buying and selling, particularly real estate, in a market sense, that can be tough to turn around in terms of low confidence, and it can be tough to turn around in terms of too much confidence, right? And we can see that with speculative markets. Oh, absolutely, and I think part of that is that we're seeing our big cities maturing now. They're maturing geographically. Their geography is maturing, and that is they're spreading. They're becoming more dense. So there's always a sense of a lot of Australians want to move away from that maturing urban geography in terms of its spread, in terms of its densification, into something which is a little bit more traditionally low-rise and a little bit more traditionally more land rather than less land. And but I also think that lifestyle is a sense of that too. It tends to be a more conservative lifestyle in rural centres. And obviously older Australians are looking for that in terms of a more conservative life, which is what their retirement is. So that's always going to be a positive driver for rural centres is downsizing baby boomers. But I think the other point would also be affordability. One of the big problems in the big capital cities, in fact all capital cities, particularly Melbourne and Sydney, are baby boomers downsizing and finding something appropriate. And appropriate can mean not necessarily the size of a smaller property, but in the area they want to live. And sometimes because of the strong planning restrictions that there are for medium density in a lot of the more popular leafy matured suburbs in the suburban middle ring suburbs of Sydney and Melbourne, it means there's very high prices and not the choice that they would like to have, because they are, there's more or less rigid planning restrictions on higher density there, which in fact the baby boomers themselves create, because not in my backyard. So that means that the choices for that type of lifestyle, smaller lifestyle, are also driven by affordability. That can be very costly, and that becomes another thing. Well, why don't I move to a regional centre that still has access to the main capital, where perhaps my extent of my family are, but also has a high level of existing residential amenity and infrastructure. So, and I think that, yes, that's obviously a driver for baby boomers going forward, and not just for baby boomers, I think also for those that have been priced out of or crowded out of the big cities, In fact, it's interesting because the whole nature of measuring housing market activity, or what's happening, that underlying noise, is really about the observational volume in a particular market. So, we know what's happening on a house-by-house basis, but that really doesn't tell us much about the underlying noise, what's happening in the market. So, obviously, regional centres are restricted because they don't have as much volume of sales. So you then get more about those individual things, which makes measurement volatile. Whereas a big city, you've got lots of observations, so it's easier to find in terms of econometrics what the underlying noise or the underlying activity or nature of the market is. So we need to look at, in a sense, which we do in big capitals anyway, more of the other demand and supporting demand and drive supply measures. And that can be supply. It can be the shift in supply in terms of building approvals. It can, obviously the rental market is very important, because typically rental markets and sale markets move in sync. So seeing the rental market can be a forward indicator of what's happened, or a correlating indicator, rents rising, rents falling. Vacancy rates are important too, to see the movement in vacancies, because that can reflect demand. But the other important measures are economic measures, and they represent population shifts. Now, our issues with that is we tend to, because of the collection process, it tends to be backward looking. And the other point is the actual process, or the actual performance of the local economy. So that means unemployment rates, it means jobs growth, which is what we can get that data reasonably efficiently on a regional basis. And that clearly tells us what's happening, because it's never a surprise that rising unemployment usually reflects eventually falling population. And of course that means reduced demand for housing, which means falling prices and a weakening market. And the other way, of course, is falling unemployment and rising employment means more demand for jobs, or more demand for jobs, and that means more demand for housing, and that will attract people into an area. Because more and more in Australia we're seeing a movable workforce. We saw that with the fly-in, fly-outs in the resource states, Queensland and Western Australia, in the mining booms, that people were prepared to shift to areas perhaps more readily to find work. And it also meant that, and part of that driving force was that the need for labour meant higher wages, and that was another key, obviously, driver for those that were prepared to have more of a movable lifestyle, a transient lifestyle, rather than going to a place to live permanently. And that's a bit different for regional centres that are already established, because people do come to live. But we still have, a lot of regional centres are still supported by a transient workforce, and that can be, good news, but also bad news if whatever's driving the transient workforce ends, as we've seen in the mining booms, and as we've seen, in areas like Orange, which lost significant drivers, and areas such as Central Queensland regions that lost their significant drivers in terms of the mining boom. So, look, economics is always important, and it's always important to have that mix of variables and measurement variables when we're talking about understanding what's happening in a regional housing market, because you need to put it all together rather than rely on specifically price data, and listings data, which can be volatile and have a mixed bias because of the small nature of the observations. Well, all these things are dual speed, right? And that always happens. And as I was saying before, it's we tend to be in sync, all our housing markets, more or less, and that's because of those big picture drivers, right, at the top level, which is monetary policy and fiscal policy. But as we drill down, it becomes more localised. So in New South Wales, we have a number of sub-markets, but generally speaking, we have our northern coastal markets that are performing the best. In fact, the northern coast of New South Wales is the strongest regional market in Australia at the moment. In fact, Ballina and Byron are growing faster than Sydney at the moment. But that's a little bit of the catch-up ripple effect coming out of Sydney with those cashed-up Sydney buyers. And now we're also seeing Lismore starting to pick up, Coffs Harbour's picking up. So the coastal markets that are close to the coast sort of have an automatic drive to them, to the water. Those that are a little outside that automatic driver rely more on local factors. And that tends to be the ebb and flow of a market. We've seen Orange, after a quiet period, for those local factors, is now starting to pick up, and it will make up for lost time in a sense. And the big advantage for markets that are not don't have the water driver but are still adjacent reasonably or have access to Sydney is their affordability advantage. With medians of $300,000 to $400,000 compared to the $1 million median in Sydney, but still with high levels of local infrastructure and amenity, they will continue to attract more buyers out of the Sydney market that are priced out, either potential first home buyers, green changers or retirees. And I think part of the government role here is to encourage that. I don't think we're going to solve the Sydney affordability problem, particularly by supply. It certainly is going to help. We need as much as possible. But Sydney can only go so far, and maybe it's only gone so far now as it can go. So that means governments have got to start thinking about incentives to get people living in areas such as Orange and Bathurst and Wagga Wagga and Dubbo and Newcastle. These areas, which still have which do have very high levels of amenity for residents, but are much more affordable. And I think that the other drive is, particularly for green changes, is to get, and maybe first home buyers are part of this, is to start to encourage a movable workforce in a sense. Most of us work in in a digital environment now. We don't really need to be in a physical workplace, and I think that regional centres can benefit from flexi time, telecommuting, these types of activities, and I think that can be facilitated by government incentives to employers, whatever, right? Just to help take the pressure off Sydney housing market, but also to help invigorate regional economies as well. And I think there's also a health lifestyle issue here as well. It's all that. So, look, it really does tick a lot of the boxes. And I know there's big infrastructure spends into Sydney, so there should be. There's an incredible reaping of the benefits through stamp duty and the economic benefits of a vibrant housing market. Now, some of that should be in a forward-looking sense spread to the regional centres, not just in spending through fiscal policy, but in activating their housing markets by encouraging people to live. And I think these areas are all, such as Orange, particularly Orange, given its proximity, are almost no-brainers in terms of doing that. But regional markets do move at different speeds. The Orange market's in catch-up mode now. We're seeing perhaps a little bit of easing in the Wagga Wagga market. Bathurst has been a bit more steady over the journey, and Dubbo's been strong because of very strong local economy, and a lot of that is its exposure to mining, but it also has agriculture. So those local factors have ebbed and flowed. Albury's a market that's been a little, has certainly moved, has weakened and been a softer market for perhaps a longer period, and that's an interesting market, but that is an economic factor. When we compare Albury with Wodonga, the housing markets there are certainly moving in different directions, but all we have to do is look at the local economic performance to see there's a big difference between levels of unemployment and employment growth in those two markets. There's no coincidence that that's the differential between the performance of those housing markets, but certainly northern New South Wales is a very strong market at the moment, and again it's starting to price people out of those areas, Tweed, Byron and Ballina, and that'll mean people start looking a little further south for their purchases, or a little further out from the coast, away away from the coast to areas such as Lismore, and as I'm talking about Maclean a little further south and Coffs Harbour. So it is a rich mixture, but I think that this is the time, particularly for regional New South Wales, to get the real impact of that ripple effect. But I think we've got a clear role here for governments, and the conversation's got to move away from supply in Sydney, and it's about shifting demand into areas which are almost no-brainers in terms of offering, not just a more affordable lifestyle, but maybe a better lifestyle. But that's up to the individual. All right.
All right.